Hi everyone. Hi Bruno.
Hello, sir.
Hello.
Hello. Okay. Okay. Good. Okay. Yeah. So let's start today. Today we will talk about this very interesting topic. From startup to sell off the company, right? So I think many of us as entrepreneurs, I think our goal is to build the business until we reach a certain status. One of the way is to either sell or IPO or even M&A, okay, merging and acquisition. So let's talk about today. Um, okay, yep. So let's start now. Okay, so we will cover different type of the exit strategy. So when you say exit strategy, you mean that when we have decided to move on to next business, or for example, we want to exit by having a certain amount of cash return, right? So then we look at that. So what's the startup journey? We will discuss about startup journey, and we're emphasizing a critical milestone that every startup should aim to achieve, okay, for success. What's the existing strategy? Why it's very important? Because we need to have a well-defined exit strategy. Many entrepreneurs, they never have an end game in mind, right? So in this presentation, we will look into the journey, and also we will explore the key growth phase of startup, and also we will look at the how significant we need to have a good exit strategy. Okay, so there's a different type of exit strategy that we will cover today. So that is a typical startup journey. So if we look at the startup, right? So we have looked at the four stages. So in our framework, we classify into different levels. So ideation process. So ideation process is the first journey. So we look at the from the idea to scaling, right? So first is the idea is where the entrepreneurs we need to brainstorm and explore, test the idea. That's what we want to do, right? So in our framework, we cover in the level two ideation and level three validation. So when we decided to move on, then we go to development phase. During the development phase, start with focus on establish their business by building their product or services. And of course, they need to test, make sure that the product and services is got demand, okay, got value in the market. Then after that, we launch in the launching phase. Sometimes we call commercialization. Of course, before that, we need to implement the solution, right? So the launching phase involves introducing the product or services to the market. And many times we want to do a complete marketing so that more people will know about our product. Of course, end of the day, we want to attract the customer. Once we are able to successfully earn the profit from the business, and we want to go into these scaling phases. So we call replication. Staff can focus on the growth strategy, and of course, end of the day, they will expand the customer base and increase the revenue. Okay, yeah. So let's look at the ideation and validation process. So the startup journey begin with the ideation, where the entrepreneurs will brainstorm, validate the idea, and of course, this phase including the market research. Also, they will identify the target market, target customers, and end of the day, they will refine the concept, okay, before it launch. So what is the scaling and growth process? So after validation, startup focus on scaling their operations and the achieving the substantial growth. This include building a strong team. That's where the human resource is very important. Hopefully, you can attract the talent, and you can develop a marketing strategy. And end of the day, hopefully, you can acquire customer to drive your revenue. So that is what with the normal process. So, so at the end, right? We talk about existing strategy. So what is existing strategy? Existing strategy actually is a very crucial part of a startup growth plan. Many of the staff never plan on exit strategy, right? So I would like to highlight to all of you, right? Plan for the exit, that is very important. So it outlines how entrepreneurs intend to sell or transfer the ownership, the share, and have a clear exit strategy can influence business decision from the outset. Of course, end of the day, we may not say, hey, I don't want to sell my business, right? I want to keep it for many, many years. Yes. But also you need to consider the succession plan, right? Yeah. So when you're getting old and who is going to take over you? So why we plan for exit? Planning for exit allows entrepreneurs to focus on long-term goals, and you will maximize the company values and identify potential buyers or investor at the very early stage. We don't need to wait until when the moment that you want to sell your business, right, or exit, then you look for investor. Actually, you can at the very beginning, you can identify potential investor from the very, very early stage. It helps entrepreneurs align their business strategies with their exit objective also. Okay, yeah, so that is what, of course, timing is very important, right? So timing of exit can significantly impact its success. So entrepreneurs should consider market condition, industry trends, and also the financial health of the company, of your company, when you're planning for exit. Okay, so here we have listed down all the important factors that you need to consider. So what type of existing strategies, right? So there's a many type of strategy exists available to startups, each with its unique advantage and challenge, right? So, okay, yeah, sorry. Okay, yeah. So each of them, they have the unique process, and we need to plan, understand the options so that we can help entrepreneurs to choose the best path, okay, for the business. So it's why the timing is very important. Of course, let's say, for example, if you're doing AI related business, right? And now it's a very good market because everyone is talking about AI, right? So it's why we say the timing, the industry trend is very critical. So what is the type of exit? Okay, so the type of exit, there's a certain type of exit strategy available to startup. Each have its own unique way, and there's a three typical process that we look at that. The first one is M&A, merger and acquisition. Okay, so it's a very common strategy exists, allows startups to combine resources or sell to large companies. The other one is IPO. The IPO, initial public offering, later we cover. So it allows startups to raise funds by selling share to the public. Buyout involved in a company's strategy is you can use it to purchase your own share. Or for example, you can invite investor, private equity firm to acquire your share, right? Of course, at the end, you may want to restructure your company. Okay, yeah. So first we look at the merging and acquisition. A merger and acquisition involve combining business or selling a company to another company. This can provide startup with access to resources, enterprise, and a larger customer base. When you also get benefit as an entrepreneur. Okay, so there's a couple of detail we will cover later. How about IPO? Yes, an IPO allow a startup to raise capital, which raise fund by selling share to the public. Okay, so through the IPO process, anyone can buy your share if they want. So this type of exit can provide significant financial reward, but require careful planning. And also, every country, every stock market, they have requirement, and you must make sure that you comply with regulation. So that is what we mentioned, in the IPO. So as a summary, before we go in detail, right? So we need to have a good strategy plan for exit. An effective strategy planning is very important. So, and we also are navigating the journey for the entrepreneur journey from startup to a sell-off require strategic planning and foresight. And by understanding the importance of existing strategy and the various options available, and you as an entrepreneur can position your startup and successful transition. Okay, so that is what we want to cover. So now let's move on to the M&A first, okay? Understanding mergings and acquisition, we call M&A. So in this session, we will look at the different aspect. If we look at the M&A, right? Okay, don't worry on that. Okay, I just give you a quick flow of this. So it cover from the understanding merging and acquisition. We talk a bit about the introduction and what are the merging acquisition and the type. Here is a different type. And of course, at the end of the day, when you meet some investor, you need to talk to them, the negotiation, you need to do a due diligence, target identification, and finally the strategy formation. Okay, let's look at one by one. First, let's define what is the M&A. Okay, M&A are strategy activities that combine different companies or transfer the asset from them to create shareholder value, right? Yeah. So we see a lot of companies that they merge, right? And after they merge together, they become a giant company and able to capture bigger market share. So what are the merging and acquisitions, right? A merger. Let's look at merger first. A merger are defined as a merger of equals, where two companies combine to form a new entity. Okay, so two companies group together become a big company, right? So bigger company. So acquisition occur when one company take over other company and making acquired company part of the acquiring company, right? So we see a lot of company that they acquire airline, right? So sometimes they acquire other airline. So that is the mergers. Of course, acquisition is one company take over another company, right? And the acquired company become part of the acquiring company. So that is the what we call M&A. Okay. So if we look at M&A, right, the mergers and acquisitions, we just mentioned M&A. So it covers three types. One is horizontal M&A, vertical M&A. Okay. The other one is a conglomerate M&A, right? Yeah. So let's look at that one by one. So what is the horizontal M&A? The horizontal M&A is a merging within the same industry. Okay, yeah. So let's say if you are in the retail industry, you acquire another retail shop, right? So it's in the same industry. Why we do that? Aims to increase market share, reduce competition, and also achieve economy of scale, right? So if you have bigger production, bigger customer, then you can able to produce more good and you cut down the cost. Okay, but if they are in the same industry. The vertical M&A involve companies at different production stage within the same industry. Okay, the same industry, right? So instead of you keeping the production to the supplier, now you acquire the supplier. Okay, so you go deeper. Okay, it's what we call vertical M&A. It enhance supply chain integration and operational efficiency. An example can be a factory acquire supplier or a retailer acquire a distributor, right? So you have your own label, you have your own brand, then you sell to the distributor, now you acquire them. So you become a full suite solution, right? So that is what we call vertical. But again, they are in the same industry. Okay, so the conglomerate. So conglomerate, this is the we call involved in merging unrelated business activities, right? So they may not be in the same industry. They can be in different industry, right? So why we do that? Because after you integrate or merging unrelated business activity, you can diversify your operations. And this strategy reduce risk by entering new market. Maybe your existing market getting too competitive or going down, right? So you want to expand in the other industry, other market. So you can, but instead of just step in and build your business, you acquire them, you merge them together, and then you reduce the risk. by entering new market. Also, you can expand the business portfolio. So of course, end of the day, we want to increase the revenue of your business. So this is the M&A process. This slide shows an overview of the stages in M&A process, including the key steps and milestones. Right. So the visual representation, for example, flowchart and roadmap, right? From that, we were able to know the more detail about the whole entire M&A. So the goal, companies set M&A strategy to achieve goals like market entry and the technology acquisition. And if you look at the technology, you find that, for example, like Microsoft, right? So they keep on acquiring the new technology. So they may not able to develop all the technology, but acquiring the new startup or new competitors, then they can able to enhance the technology platform. So they use strategy planning framework and a visual to guide and illustrate the plan also. And the strategic planning, normally we come up with framework to guide the decision making. And of course, sometimes the infographic will be very useful for this stage also. So when we decided to acquire other company, right? Well, we need to identify the target. So here is a step show us how can we acquiring target. So normally we look at the strategy alignment for the target identification. Because once you acquire the target company, right? And you don't want to diversify into different direction, right? You want to align with your strategy plan. And also you can able to divide your market into different group. And of course, end of the day, you need to focus and make sure that you are able to acquire your target successfully. So that is a process. When we do a deal M&A, we need to go through this due diligence, right? So due diligence is a process for us to make sure that we are paying good value for the acquisition. So what is the good value? The value, it means that you achieve a successful checking or inspection for the company various aspects, and that is called due diligence. So first, we will look at the business evaluation. We accept the overall company performance. And also we need to identify the SWOT, the strength, okay, the strength and weakness. And also we look at the company asset, right? So in the company, they got tangible and intangible asset. Why you do that? Because when you acquire, you need to pay for the company asset, right? And also make sure that you know what is the liability, how much money the company had borrowed, and also what kind of payable you need to pay to the suppliers, right? So there's a liability. Then the other one is a potential assessment, whether can it grow for the future, right? So we analyze the growth opportunity. Also, we assess the market potential. So when you start the M&A process, you need to talk to the companies, target, right? So this is why you end up at we start the negotiation and purchase. So when you meet together, then you need to highlight those key discussion and terms, rather than otherwise you're going to waste a lot of time, right? So you need to highlight the key point and the terms. Then you need to highlight the strategy so that you're able to have successful negotiation and lead to the successful M&A. So once everything okay, you agree, then you're finalizing the deal. And of course, normally the lawyer will come in this stage. They will review and discuss and translate your agreement into the contract. And you need to, as an entrepreneur, you need to look at the contract and make sure that you and the company both agree. And of course, after that will be integration, right? So when two companies integrate together, there's a challenge in merging operation, because there's a two very different system, right? You don't integrate together. Again, alignment is very important. You need to align different corporate culture, because different company have different culture, right? So you need to make sure that both team they're able to integrate together and provide a better result. And when you have a challenge, we need to overcome the challenge. So we need to normally, after the integration, the companies will be develop a unified operation strategy so that both parties, they all agree. And of course, communication is very, very important. So strategy, rationale behind M&A, right? Just how we mentioned, because we want to um, motivate the company to achieve a better goal, right? So also we would like to have the strategic benefit because we are able to reduce the waste and maximum the resources. So that's what we call economy of scale, expanding the market. Since merger and acquisition, right? So normally this is a required equity transfer. Also, there's a money involvement. So we want to increase the shareholder value and increase the revenue stream. The operational benefit, it can enhance the operational efficiency. Of course, two companies, there's a lot of duplication of resources. So you're able to clean up or able to we call optimize the operation. And end of the day, by acquiring the new technology, you can also gain the access to new technology. So the synergy and growth, efficiency through M&A, right? Just like I mentioned, you can able to streamline the operation and reduce the cost. You can able to grow faster, rapid growth with the AMA. By acquiring the other company, then your company can grow compared with your organic growth. Organic growth, it means that you have grow by yourself, right? Yeah, but acquisition can have a faster way to expand the market reach and also can increase the revenue. The synergy creation, combine the different strategy, then in this case, you are able to have better capability. So the diversification and acquiring talent and technology is very important. The reason behind the diversification, because we want to spread the risk across the different investment. Because sometimes we don't know exactly which market will be successful, right? So sometimes it's a bit of try and error. But doing acquisition, you are not starting everything from scratch, right? So you can reduce the risk. Why we need to acquire company? Because sometimes it's the talent. You want to recruit the talent. Okay, talent is a person, is the item. Okay, is a key thing behind the technology, right? So after you acquire the talent and acquire technology, you can able to stay competitive in the market, right? Yeah. So why you need the people? Because many of the smart people they are not working for a company. They are entrepreneurs. So when you acquire them, actually you are actually acquire the innovative and high performance team. Yes, we have a challenge also. So challenge and the risk of M&A, integration issue. What kind of issue, right? Yes, we mentioned before, right? In the system and processes, they may be very different. So we need to know how to integrate together and also the cultural differences. Sometimes the M&A can be overvalued, right? So you pay higher than what you want to acquire. So then end of the day, you will affect your financial health. We need to make sure that it complies with local and international law, and sometimes can take a long, long time, and government may not agree for the M&A. When you are expanding a company by through M&A, and of course it will be increased financial burden. Your size of the company is going bigger. Also, you may have a risk of default. It means that you may not have sufficient cash for you to execute or to operate. Good thing on M&A, if you really have a target, then what is the outcome of M&A, right? You need to have the success matrix in M&A. Sometimes we call KPI, key performance indicator, KPI. It will use to evaluate success. And also, we also have a financial matrix, for example, revenue growth and cost saving. They are the KPI that we need to use. So potential result of the M&A, of course, positive outcome. The entrepreneurs, the exercise will be very successful, right? So we want to have a higher income, right? So positive outcome can be used the market expansion and increase the market share. This is our objective. A negative income can be the integration challenge, and just how we mentioned, also the cultural differences. So yes, the M&A is still a very common way for company to expand, and it's essential for achieving the strategy growth, and also they will be have a better and measurable planning and management outcome. We mentioned about alignment. Make sure that you align properly so that both company will not have confusing strategy. So we call strategy alignment. Before you complete the deal, you need to check the company. We call due diligence. And also after due diligence you sign, then you need to ensure that there's an effective integration process. So that is the next popular part. That's what we call IPO. This section we will look at the introduction to IPO. IPO, the full name is called Initial Public Offerings. Okay, so this is some of the list that we are going to cover. So first, let's look at the IPO, right? So what is an IPO? Why IPO is so exciting? First, we look at the definition of IPO. IPO can define as a process by which a private company become a public traded company. As a private company, you cannot have unlimited shareholder. You only have limited shareholder. But if you are the public company, or we call public traded company, yeah, you can have as many shareholder as possible. And because you have a lot of shareholder, so sometimes we call this is not a private company, it's a public company because everyone can be your shareholder by right. So shares are offered to public for the first time. Okay, so this is called IPO. It's called initial process. Okay, initial public offering. Of course, after you listed, then subsequently you can have a lot of share transfer, right? Share offering. Yes, the transition from private company to public is quite interesting. So after the transition, the company share become available on the stock market, and it will increase the visibility because a lot of people will talk about you if it's a successful business model, right? And you're able to earn a good income, and you can also access to capital. As a listed company, you can issue new share. And when you new share, just like you're printing money by yourself. Of course, we will talk about that, right? So yes, you can access the capital, but of course, you need to make sure that you create value of the company. So this is for the IPO. There's a certain process we need to know. First is the financial milestone. Okay, yeah. So it provides access to capital for growth after the IPO, and you can able to enhance the company financial stability. Okay, yeah. And also, yes, you need to have good strategy and you have milestone. You need to tell the investor so that when they invest, they know which stage you're in, what is your future, right? So that is what we call market visibility. Of course, you can able to attract more investor and more partners. So opportunity for growth, fund for expansion and innovation. So you have a new idea, new potential product, right? Once you convince the market, they will, you can able to acquire more financial resources, or you have more fund for expansion and innovation. And of course, when you have a better resources, right, then you are able to compete, okay, in the market. But the other way around, since you're a public company, then you have a greater regulatory. You need to follow the exchange, the government policy, and also since you have more shareholder, they have a higher expectation. So what is an IPO? IPO process. Just like we mentioned, transition from the private company to public company, and you will have an expansion of ownership to the bigger number of investors. So there's 4 stages for a standard IPO. You need to prepare the IPO, and you need to do a due diligence. And once you decided whether you want to list in Singapore, Hong Kong, America, right? So then there's an exchange. and you need to file the necessary document with regulatory authorization. For example, if you go to Singapore Stock Exchange, right, will be Singapore SGX, Singapore Stock Exchange, and you need to file all the necessary document. And you need to start marketing your IPO. Let people know about you're going to list soon, and know how much is your share. So once you've done a successful marketing and meet all the requirements, you will be a public company and you will be a public listing and trading company. So these four are the key steps. So again, we ask ourselves again, okay, reason for going public. Conclusion is point number one, access to capital, raising fund for expansion and growth, increase the visibility, and you enhance the public profile and brand recognition. Equity for shareholders. Now your shareholder, some of shareholders want to stay with you, some of shareholders want to sell, want to exit, right? So you give them the options, right? Especially for early investor, they put in money in your very early stage, right? So when you IPO, that's where they can exit. Also very good for your staff, your employee. It become an employee incentives. You can offer stock option to attract them and retain talent. When you're a listed company, you can issue share to them. Of course, there is called option share, right? There's a certain condition. But if they are really believe in your company and then they like to work your company, then you can reward them by the share. That's why many listed companies are able to retain top talents. Acquisition currency. So actually you can using your stock now to be currency for acquisition. When you want to acquire a certain company, you don't need to pay cash. You don't need to pay them cash. You can pay them the share, your shares. So your shares, your public traded company share, swap with their share. So your share become a currency. You don't pay them in cash when you acquire. So these are the reasons for going public. Just how we mentioned about fundraising, right? Capital raise. Yes. Funding for operation, you can able to provide a sufficient capital for daily business operation. You can able to pay debt, right? So some company, they borrow quite a lot of money from different investor. They're paying very high interest. Now, after listed, you can sell your share and then get the money and pay back the debt, right? So then in this case, you will help to reduce the financial liabilities. And you can do the R&D, right? Because you have more resources now, especially in financial resources, and you're able to have a strong innovation and research in your company. That is cater for future growth. So when we listed, we always mention, we want to highlight about this word called liquidity. A liquidity for founder, because some founder after IPO, they may want to sell their share so that they can have return of the investment in cash. So IPO provide exit strategy for founders. Okay. Also, it's opportunity to cash out the share, just I mentioned, right? Because until they can sell the share, and they got a lot of they can sell to public, right? So it's not easy for them to sell the share, especially before IPO stage. So and also liquidity for early investor. Now, early investor, they invest in your company in the early stage. Now they have chance to realize the return, and they also can convert the share, the equity into cash. Right. So before IPO, it's a limited liquidity option. Because as I mentioned, before IPO, right, you only have very limited shareholders. Now, after IPO, you have almost unlimited shareholder. So yes, your liquidity for your share, right, liquidity after IPO have increased. So after IPO, share can be sold on the public market, as I mentioned, right? Then also you can increase the financial flexibility. Of course, after IPO, right, you become a public company, so public profile and credibility, very important. We want to attract and retain good talent. So recruitment process become a benefit for a listed company, and you can attract the top talents with potential for future gain. Also, you can offer a very competitive compensation package, salary with a stock option. The retention benefit, now your staff will stay longer and you're encouraging them for long-term commitment, because the more you work with a company, they will receive more share, and so that and working hard for the company perform well, the share price will go up, right? So in this case, you are able to align the staff, the employee interest with the company success. Equity incentive, just I mentioned, right? You are able to provide ownership stake and motivate your staff. So this is the IPO process, right? So just how we mentioned, we summarize the stages of IPO, and at the same time, you can also explore the roadmap, okay? And also is an important process. When we go to IPO, we cannot go to IPO by ourselves. We need to have IPO team. The most important team member is the underwriters. So underwriter means if you cannot find enough shareholder or investor, sometimes underwriter, or for example, their bank, right? They will take up all your shares. So who are they? They're the investment bank, right? So the investment bank, they will assist company to go IPO, and they will also provide underwriting services. Just I mentioned, right? So at the end, they will make sure that all share will be taken up before the IPO. They also will manage the risk. We call risk management, and they will assess the risk, and also we mitigate, potential risk, and they will ensure that the IPO, the company ensure that the company follow the regulation, right? Of course, they will decide the share price. If it's a good market, the share price they can define higher value, and otherwise, in the bad market, they may not able to reach their goal. But that is fine, okay, because if it can be a position in the cheaper stock after IPO, if a company doing well, right, the share price will go up. So the underwriter will determine the initial sharing price, the share price, and they need to balance between the company value and the market demand. Of course, market want the initial share price is as low as possible, right? But if low value, then it's not fair to the entrepreneurs. So they need to do a very well balance. Just like I mentioned with due diligence and regulatory filing. So is a part of the preparation. So before IPO, they need to make sure that all the necessary documents are in place. This process also will help in identify potential issues as early as possible. They make sure that they follow the local legal standards, and of course, you may not want during the IPO, marketing IPO, and then you have certain problem, right? And you don't want the legal problem. So the good due diligence, it can prevent the legal compliance, because they may able to find certain problem during the due diligence. And of course, if that happen, right, then they will recommend company to solve all the issue before go for IPO. So, and there's a step for compliance, understand the relevant law and regulation, and you may need to require additional document to support your situation. And they will review, because law and legal issue, they may happen during the whole entire IPO process, right? So you need to have an ongoing frequent review. So how do we define a stock price? This is a stock pricing mechanism. And it all depends on the market demand and supply. As I mentioned, right, as entrepreneurs, we want to have higher, when you sell the share, we want to sell at a high price. But the market may not. They may find that it's too expensive, right? You need to see what is the economic indicator, what is the interest rate. If interest rate is too high, and people may just put the money in the bank, right, instead of buying share. So you need to look at the interest rate, also the inflation rate. what is the investor sentiment? Whether it's a good time to sell a buy share, right? Or now it's very, it's a slow market now. And so the market trend and then the news event are very important. And there's many external factors. The external factor can be political stability. We all know that now is a lot of political unstable, right? So among the world, and also we need to look at the global economic conditions, right? So I think that is important also. So what is the IPO roadmap? The roadmap, why we need a roadmap? Because we want a very clear plan for everyone. So the purpose of roadmap is roadshow, right? Sorry, roadshow is to engage the target audience. Remember, at the end of the day, we want to have sufficient investor to buy the share during the IPO process, right? So we need to engage audience. So it's something like marketing event, right? We call IPO roadshow. And of course, people buy your share, they want to know what kind of product and services you are providing, right? So you promote your product and services. And in fact, many IPO cases, people know you and you will have better revenue, okay, during the IPO. So during the roadshow, including the presentation and demonstration, and you have networking session, of course, you have interactive session to have a better understanding and close feedback with your audience. So finally, everything went smoothly, then you will go for public. During the public, you need to prepare the public listing document. The public listing document need to ensure compliance with the regulatory requirement, and you need to have all the necessary document be ready. You engage with the stock market, and you submit application for listing. Many company, any stock exchange, they have a plan, they have a report showing that what are the company going to IPO, right? So you will submit the application, and of course, the stock exchange, they will review, and hopefully you will get approval. Sometimes they may give you in principle approval, you need to achieve certain thing, right? So of course, final approval is very important. So set the IPO date and price. It's very important, right? And also once you set a time before the actual IPO day, then you can do the marketing to the potential investor. Commencement of the public trading. You will give them a code, trading code, right? And the company stock begin trading on the exchange. And of course, you need to monitor the share price and also the investor relationship. Many listed company on the website, they have the investor relationship. So it's how you can engage with your potential investor. Yes, of course, sometimes we need to look at the risk also, right? And what is the risk and consideration? Yes, the risk involved in the going public and challenge. So first risk will be market risk, market volatility. And sometimes the share price will go up and down, right? So I think we all know that this is a law in the share market. We need to know if the market is no good and it may be risk for you if you want to go to IPO and you may not have sufficient investor. Economic conditions, it definitely will affect the investor confidence. The regulatory environment, the factor is from the policy, political, and regulation. Industry trend and global event. So they are all the market risks. Another risk is loss of control. Because you got more shareholder, the more shareholder come in, right? Then it means your founder share will decrease. And new share will gain on ownership. And your control will shift. Because decision making may not depend on you. Right now you have a lot of directors. The decision power may be reduced. And also you have external investor will influence your decision. So financial implication, Yes, it can have a potential for increased capital, and also the market valuation may go down, right? So everything is all related to the loss control of your company. You need to follow more rule and regulation. Here, all the rule, right? The regulatory expectation from the government, the public expectation, the public shareholder public will have their own view about your company. You need to be transparent, and also you need to be very clear in your accounting process. We call accountability. So, at the end of the day, you want to build a sustained trust. It's public trust, right? So many of the successful share in the market, and the investor is not investing in 1 or 2 years. It's about 10, 20, 30 years, right? So they have very strong trust between each other. The media, the public, the newspaper, the media, social media, right? And all the media report, they will play a very key role, and you need to handle negative media coverage. The financial report, you need to report your financial performance in a timely basis. So some of this every 3 months, 6 months, right? And you need to report all the financial results on time. Why? Because it will meet the investor expectation. You don't want investor wait for too long, right? And in fact, the SGH or the Singapore Stock Exchange or the Hong Kong Stock Exchange and US Stock Exchange, they will have a fixed time for everyone to follow when we release the financial report. So after IPO, the life is changed. So the best way is to have all this process in place. You have transparency, right? So clear and accurate reporting, complying to the local regulation. And if any new rule come in, you need to get updated. And you need to have the good shareholder communication, corporate government, right? Internal control, and of course, some of them, they also look at the CSR, right? The contribution back to society. And this one is the financial report. Okay, so they are all the activities after the IPO. So conclusion, right? So we need to think of IPO. It requires careful planning and significant impact to the company. And the consideration IPO, yes, you need to have a very good decision making, because strategic decision, and of course, end of the day, you're not looking for a long term, short term. It's a long term growth potential. So finally, we are looking at this SPAC and pipes, right? So there is a quite a new way of getting IPO listed. We will look at the introduction. Okay, first we'll look at the introduction of SPAC. What is a SPAC? A lot of people talk about that. SPAC. If you look at the SPAC, involve investment vehicle form to raise funds. So the investment vehicle form first, even they don't have any business to run. So this is very interesting, innovative way. So they form an investment vehicle first. They have fund. Then acquire private company. So IPO is that you are running your company for many years, then you go IPO. Now in the SPAC, it's the other way around. Or you form an investment arm, and then you look for the private company and go to acquire them. So that is a process. So then the IPO, right? So SPAC raise capital through IPO. And they will have blank check company. It means that this SPAC company listed, but it's actually no business, no real business. That's very interesting. And also no specific investment target initially, but certain time you must get. So formation and IPO process, right? So first of all is that it's a SPAC sponsor. So you look for the investors among the industry first. Then also you can including the fund manager like hedge fund, private equity firm, and high profile individual. Right? So they got money. You raise the money first. Then after that, investor buy share and warrants, and a fund raise are placed in the interest-bearing trust account. Okay. For example, if Bruno want to form a SPAC, so Bruno, without running any business, Bruno can talk to investor. They say, okay, fine. Then we form a spec first, right? Yeah. And of course, the money is not under Bruno's pocket, right? So you need to put in the trust fund. No one can touch your money. After that, then you look for the acquisition target. So of course, you cannot spend unlimited time, isn't it? Because money is, the investor part the money in you already. So that is involved in search period and trading. So post IPO, you're already listed, your spec already listed. So you have 18 to 24 months to find a target company. Okay, so you list first, then you look for the company. And of course, you're trading on the stock exchange, right? So spec shares trade despite no business model, no operation, no commercial operation. You can trade. And then once you find the target company, right, then the target company normally is complement spec management expertise. So it means you grow a spec management. Let's say, for example, there are a lot of people interested to invest in AI, right? So you raise a fund, let's say you raise about 100 million fund, and then you, after that, since your goal is to look at the potential AI company, then you go to acquire them within 18 to 24 months. So when you selection and merging process, remember just now we mentioned M&A, right? In fact, this is a, that is a, the M&A also part of the process. So you selection of target company. So identify a suitable private company for merger to be acquired. Then the merger process initiation. So you begin transaction known as reverse merger. And the private company become public without traditional IPO. So the spec listed first, then you acquire when you during the acquiring the target, right? That target company actually become an IPO, go public through the process. The spec shareholder vote, of course, you need to vote because you raise fund already. You need to make sure that you are follow and you must able to vote on the the proposed acquisition. You cannot just anyhow, you say you want to invest AI and then end of the day you go for a restaurant, right? And retail industry. So some of the investor may not want. So you need to do a vote. Once you get approval, the approval will lead to significant ownership for the private company stakeholder. Right? So when you acquire them, the spec company, they become a shareholder, become a major significant shareholder. And sometimes we also talk about the PIPEs, right? PIPEs is a definition of PIPEs. PIPEs is a private investor. They buy share of a public traded company. Okay, so the share are bought as a discount to the current price. So you may have sometimes you buy the maybe one of the stock, right? Suddenly stock gone down a lot. Why? Because company is selling a share to an investor at a lower price. All right, so you have all over discount. The purpose of PIPE used by private company to raise capital quickly, because if you need to look for, let's say, 1,000 shareholder to raise fund, right, to have a new share, then compared with you look for one investor, give them discount, one time they are able to, you're able to raise the fund. So in this case, it's faster and also less regulation required. So additional funding through PIPE, right? So how PIPE actually related to SPAC also. Because they will provide additional funding for SPAC merger. Let's say, for example, you already raised 150 million and about to acquire, but you think that, hey, I want to increase to 300 million. So in this case, you have additional investor. So they come in as a PIPE. Financial target for target market. So you offer more fund for acquisition. And of course, where are the source of additional capital, right? What is the source of the PIPE? It can be institutional investor, right? They can be hedge fund, private equity fund, and also individual high net worth. We call equity investor. So what is the impact on shareholders? Because we mentioned that on the PIPE, they got discounted share. So we may not be happy for existing investors, right? But it's for PIPE investor, they like it. So it's an incentive for PIPE investor through discounted share price. And you have a potential dilution of the existing shareholder because more share issue, right? Your existing shareholder, your percentage, your number of share may not reduce, but your percentage will reduce. So in this case, we call it with dilution. Credibility boost from reputable PIPE investor. Of course, if you're able to get a very famous, very reputable investor to be your PIPE, and it will definitely, give you a better boost for your reputation. And of course, you need to get involved of a reputable investor, lend credibility because investor, they will also bring their credibility to you also. You also will be giving SPAC shareholder, okay, a clear indication. You need to give them sufficient information, okay, about the acquisition. Otherwise, they will have a lot of rumor, and from them, and it will affect your reputation. So interaction between SPAC and PIPE. A critical role for PIPEs in a SPAC ecosystem. PIPEs provide essential capital for SPAC acquisition. And without PIPE and the SPAC only, you may struggle to complete the acquisition. With PIPE, you can able to enlarge your acquisition, right? Yeah, so you can acquire a bigger company or more targets. And this is another way to beyond the IPO fund, right? So the fund raised during the SPAC IPO often insufficient. So you may using PIPE to raise additional funding. So advantage of the SPAC and PIPEs, right? So allow investor to pool resources within experienced sponsor, and you can able to identify investment opportunity. It provide a faster and less volatile path to go IPO. So very fast actually. The PIPE provide company with fast access to capital, offer more liquidation flexibility on the term, and compare with traditional public offering. So this is quite popular. Of course, there's some obstacles and problem, right, about SPAC and PIPE. SPAC, some people see is higher risk for investor. And remember I mentioned, right, so you invest in company, actually no existing business operation. And also no guarantee whether they're able to find a good target. Of course, end of the day, if they cannot find a target, the money will return back to investor. So PIPE, a risk of dilution of current shareholders, because you offer the investor as a lower discount, right? And more shareholder coming in, your percentage will dilute. Discounted price can undervalue the company. And also you will benefit the new shareholder, not existing shareholder. So lastly, as a summary, SPAC and PIPE in the financial market, it offer alternative approach for company to access public markets. And you can also provide capital for company growth and expansion. There's a lot of innovation in the financial structuring, right? So that is correct. You can use it as a innovative financial strategy. And also you can look at that as a new way of marketing opportunity for investors. We mentioned about potential risk. At the same time, the process can be complicated because it requires a group of professional team. They are familiar with this SPAC approach. It's very different as a traditional IPO. Hi, Bruno, and hi, Chance.
Hello.
Okay, good. Yeah. Okay. So let's come back. Okay. So we are discussing about the IPO exit strategy, right? So Chance, you have anything to update before we go into the round table discussion?
Hi, Patrick, and everyone. I don't have a specific addition, just because I myself are quite new to this, practice, and yeah, it's super educational for tonight's session. Although I jump in late, but I exactly grabbed quite a few new terms, and hopefully
Okay.
I can learn more from you guys.
Okay, good. Okay, let's for discussion as well. Okay, Bruno, how about your side?
To be honest, I am quite curious about this topic as well as I got a lot of insights and knowledge bases from this because I have learned about IPO from Professor Patrick a lot of time actually. And then the second thing is I have noticed that different countries or different no nations, not different nations, they got a different rules or different priority in the IPO. And in fact, they actually want you to be an IPO. Actually, we consider in the different terms. The first term is like we are starting a business, we are doing entrepreneurs. Maybe it's quite hard, and people consider that oh why they give me so many tests, why they do not have a lot of funding to us to start a
Mm,
business. But as in second way, if we dig closer for the IPO, actually the government is want you to do that. Actually, the government want you to do entrepreneurship. That's also the reason why they offer funding. Also the reason why they offer lots of opportunity. So after I discussed about it and then learning about like spare, learning about pipe. Actually, in the very beginning, there's not much terms to come up, and even so, there's a lot of ideas or like rules that you can analyze. Let's say you can build a IPO business in Indonesia, you can build a IPO business in Malaysia and something in other country as well. So actually, the world is encouraging you to do IPO. It's not another point of view. Yeah. So I would be so happy to learn about it, and yeah, I wish to be IPO one day in the future.
Okay, excellent. Okay, good. Okay, so let's explore together. This is a very interesting question, right? So, so the question from the audience. So this is the question basically is asked about the timing in exit strategy, right? Yeah. So when is the best time to exit? I think this is a question. Okay,
Okay.
yeah. So, what do you think? All right. What do you think, right, Bruno? When you start a business, right? I mean, there's no right and wrong, right? So when is the best time you want to exit?
Right, that's quite hard for me to answer it because I'm not really a easy to give up guy, a person.
Okay, that's good.
But
That's
but
good.
I agree with this one for the access plan or access strategies because in a rational way we all see everything is like a investment or in terms of the I would say it's the progress like every empire they got fail one day. So that's what I believe in. So having a successful access strategies or access plan is individual and it is rational and very important for all of us. So for my own side, for the timing, I will see in two things. The fun thing is it the business or is it the items that we offer is already outdated? Nobody want to use it. And how
Mm,
exactly we're going to do it? We need to do the marketing. Yeah, we need to do the validations. And once I find out that oh, actually nobody like playing chess. Nobody like playing chess. So that is what I found in the market. So I will do another strategy is it only for Hong Kong or is it only for here? Maybe in other place people are interested in playing chess. So that is the innovation that pass in. So for my own priority, I will consider two things. The one thing is the market. The second thing is can we do it innovatively.
mm,
So otherwise, sorry for this one. If you cannot finish up these two items, I will enhance my discipline and do it quick. Yeah. So
mm.
this
Okay, good. Good. Thank you for sharing. Right. Okay. So I give some answer from my side. Right. I think timing is very important. Right. The question asked with timing, but I would say that actually timing is very important because timing is crucial for a successful exit strategy. Because there's a two thing. One is the valuation. Agree how much people are going to offer. Assume that you exit by selling your company, right? But I agree with Bruno, and yeah, you may be very keen in your business and you may not want to sell, right? Assume that you are built to sell, let's say, for example. So I think timing is very important. You must be very clear on the timing. Then, I mean, just like, I think today will be one of the major thing happening is the DeepSeek is really going so big, and everyone is talking about DeepSeek, right? So I look at the screen now, and NVIDIA dropped 11% in the pre-market trading. So timing, right? Okay. We don't know what's going to happen, right? Is it true that the DeepSeek will be disrupt the whole entire AI? Because as you know, DeepSeek is only spent, 5 million to build a whole entire system, right? So when the OpenAI and the Meta, they spend $1 billion to build. So with the $5 million, you can build a whole solution there. So all these things is about timing, right? So, but I would say timing is very important. And the valuation, how much people value your company, also very important, right? Yeah. So, of course, we need to look at a few factors for you to decide whether it's a good timing. Well, first is market condition, as Bruno mentioned, the industry trend, and also maturity of your business. You are the only one know that whether your business is reaching peak. It's difficult to carry on, right? So all these factors will give you some indicator. Okay, and no one will tell you when is it, right? So I think that is a quite interesting question. So we have another question here. So talking about building the company via acquisition. So let's look at that. When you say long growth, you mean organic growing. You don't acquire other company, you just grow by yourself. Organic growing. Okay. And then the other one is acquisition. You acquire other companies so they can grow faster. So how do we balance? The question is, how do we balance? Should we acquire company or should we grow by ourselves? Okay, so before I share my view, maybe I don't mind pass to Chance. Chance, what do you think? Do you prefer grow by acquiring other company or grow by yourself?
Well, really, yeah, that's a great question. I myself, I experienced a private exit by the year 2014 after the 3 years effort on my first start. So my experience is it really depends on the nature of your business, and it really also depends on the we call them the equity growth strategy for the whole company. Yeah, there are different nature of your business, right? It's a service, is it service oriented? Because is the major driving force of your company growth, depending on the people's network, right? That's one. That's a majority type of company are primarily about people and processes and growth. They are more linear, right? But for the tech company, for example, like Patrick said, the DeepSeek, they are more non-linear growth. So for the non-linear growth, is mostly most of them are technology company, right? They brought innovation via disruptive technologies and could potentially drastically change the dynamic in the market. So those companies they are value really high, have really dynamic ownership structure. So yes, so we can judge. My personal idea is let's categorize them into broadly two categories, right? So is it service based, right? Yeah, or is it technology driven? So and there are also many arrangements regarding the change of hand, right? Because when we talk about exit, it basically means that there is a major change in the ownership of the current and future equity and ownership of the company structure or the company equity, right? So that arrangement itself has to be aligned with how you're going to grow the company for the next, phase, right? So typically with that projection for the company growth, we need to consider the strategic new partnership or the existing partnership, and how can we align the changes of those partnership with the future projection or plan, right, for the company growth of the equity valuation, right? So there are these business level, concern, right, because they are the product and services that are some business they are really key, but for some technology-driven business, for example, DeepSeek, the actual services and product, they are not that important. It's all about the technology and the projection of the performance and the expected value of that technology. Yeah. So back to you, Patrick.
Okay, very interesting. Okay, yeah, I think this is a very interesting topic to talk about that today, especially the DeepSeek situation. Okay, yeah. So, yes, okay. Thank you for sharing, and maybe we go for next question, right? Yeah. So, because Chance have gives a very good overview of that. Okay, so many entrepreneurs end up a situation when they need money or the competition or some reason that the market have going reached in the maximum, then they look for the investor. But end up is a disaster for them because every competitors or anyone is trying to sell, so it's very difficult, right? So this question actually is that is what way we can a startup can proactive develop relationship with potential acquirer before the exit. Okay, so I think this is a question, right? So how can we develop relationship with potential acquirers? Okay, maybe I can take this question. For me, there's no such thing called early investor. For me, investor and customer are the same. When we really sincerely serve our customer, when opportunity come or you decided to exit, your customer may be the best investor. So we don't need to plan. We don't plan. And also we don't last minute look for investor. The moment that we launch a business, launch a startup, we should have a good relationship with the customer or investor. Okay? Because investor are the people, they will definitely try your product, experience your services, then they decide to put money in you. Correct? Right? Yeah. So I think that is my straightforward answer as well. Okay. Let's look at that. That's also very interesting. Okay, so what are the parameters, right? So, okay, this question actually is a bit in strategy, right? So, what is the key financial matrix and a business indicator, right? Yeah, focusing on the acquisition valuation. So, it means that Bruno maybe have $1 billion. He want to do acquisition. He want to buy company, right? Of course, Bruno is not buying for fun, right? He buying by expecting making money. So what kind of financial parameters that Bruno should look at that? So I think there's a couple of matrix parameter that Bruno can look at that. First is focusing on revenue growth, right? It's not profit because we know that sometimes profitability is not the main key, but revenue growth is very important. So yeah, that's the first key parameter. Of course, you also look at the profitability. The other one is a customer acquisition cost. If the business take a long time, it's very expensive to acquire one customer, or we call customer acquisition cost, that may not be a good idea, and Bruno may not want to invest. Right? So the cost in acquiring a customer also very important. And the lifetime value is important too. When a Patrick is Bruno customer, I will be using Bruno services for my whole life. It would be good, right? So how long the is it a lifetime value, right? Right. Also impulsive, I don't use one, that's it, I disappear. That may be difficult, right? So this is why the parameter is the lifetime value for the customer. Right? Yeah. So all this is an important parameter for most of the investor they will look at before they put the money in the investor.
May I talk a little bit more?
Please.
Yeah, because for that question, recently there's some companies or some alternatives, I would say, to ask me to do investing or even for the workload of all those businesses, even for the startups. And to be honest, I will do in two things. The first thing is I know the question is about financial metrics, business indicators, but I will also consider in two ways. The first way is what Professor Patrick had already taught me is PE, P ratio, which means the price to earning. You can also see the shares, and you can see the price settings about another business. Of course, you can also under our own models, entrepreneurial maturity model, to define these companies what is the worth, what is the priorities. And the second things I am more consider is beyond financial, is beyond business indicator, but more importantly will be the team's management as well as the founders. Because I have watched a lot of Shark Tank. I'm not sure is it you still watching it. Yeah, Shark Tank and something that you performs to the investor, and that moment of time is you only have like pitch talk while we are doing pitching. There's few minutes for you to do, and some ideas or some is quite crazy, and we are not have times to do this kind of indicatings or mature at model timings, because the investor or the startups might be being taken by other companies. That's the reason why Shark Tank is quite a limited moments. And I believe that the team and the team management as well as the founder and all those things together should be another business indicator. We do a caution in here for the buyers, I would say. Yeah.
Very good. Thank you for sharing also. Okay, yeah. Okay, I got this question. Okay, I definitely want to ask a chance. Okay, so this question is talking about, okay, let's bring up that, right? It's talking about the team morale. Okay, yeah. So basically this question is, how should founder approach delicate balance between maintaining team spirit and productivity while at the same time they are preparing for exit, right? So Chance shared that his company being acquired, right? So should he keep quiet, or they should tell the staff? But when they tell the staff, they tell say, "Hey, boss is going off. People are selling. Why you work so hard?" So that is very interesting situations, right? So I want to hear from Chance, right? So if the founder, the entrepreneurs is facing this situation, what should they handle?
Sure. Thank you, Patrick. Yeah, that's a great question. In my first startup exit, in fact, it was the strong disagreement between the CEO and the rest of the other founders. The company we already developed we started by 2012, and the company already grew from below 7 people up to 50 employees over 3 years. It's hyper growth. We are closing in like 50 million RMB annual revenue. So in terms of how to develop the company and what are the strategic next move, we had a strong disagreement between the CEO and the rest of the other founder team. Then we negotiate a deal where we transition the company from the current state where we already validated the business model. Then they need to take it. The CEO himself was very confident that he can take it alone for the next level, or towards other types of strategy. Other founders didn't agree. So under that condition, we simply will summarize the situation and communicate not just internally to the to the existing employee but also externally to our supply chain and the suppliers, and also to all the people concerned about our company growth. So the key is to understand the situation and project it in a way that are positive to both the internal team and also your supply chain and also your partners ecosystem. So that the key to be being integrity, right? The integrity of the whole team is really the key, right? Is the key. The integrity of the founder team regarding the change and the ability to communicate the change in a positive way to other to all the stakeholders are the key for the transition. Yeah, back to you, Patrick.
Okay, thank you very much. Okay, excellent. Yeah, so I think end of the day we all know that a successful startup or a successful company is all because of the team, right? Yeah, exit of the company sometimes may have a different perception towards the team member also. But as long as the company is concerned, I think before or after acquisition exit, the most important is the company is still going well and company will have better future. So I thought that would be a very important reason why the team will stay behind and is ongoing motivation for the existing staff also. Okay, good.
About that question, as I
Yeah.
remember, what Professor Patrick had already taught me that actually we have some, I would say some strategies. Not to say that just assuming that for the team members, it's not only for founders. They don't have any decisions making in the acquisitions. They are just employee. Just assuming that, or just some of them are founders, something like this. And I remember that we are having like strategy while they are dealing with the acquisitions, we can have a potential agreements that if you are going to buy my companies or you are going to sell the company, you need to ensure that 3 years you cannot fire the team members. You cannot fire them. Or in the second way is you cannot sell it on this point. You must sell this on this point. You cannot lower your price, something like this. Some strategies that you can with things to the acquisitions and then to keep your own team to be safe. I'll say that to be more satisfied inside these competitions. Yeah, even the acquisitions. Right.
It's very good point. Okay, put the staff future as a part of the discussion. I think I like what Bruno said. Right? Yeah. So you may be exiting the business, and the new owner coming in, but if you can able to also consider your staff to be part of the terms during the discussion, I think that is a very good idea. Very good idea. Thank you very much. Okay. Yeah. So next question. Yes.
Hello.
Hi, Adira.
Okay, thank you so much. Can I ask you some things?
Sure.
In my country, we have a problems. In Indonesia, we have a problems with the like employee in some startup. For examples, like in AI eras, the startup they will give us the good salary when we have like good experience, maybe like 5 year experience or 10 year experience. But the people who understand with the AI mostly is like in my generations, maybe mostly right now, and then they give us like really low salary for the reason because we are fresh graduates. Then if we more we really better in AI or in technology than the people when have the experience work maybe around 5 or 10 years like that. And then mostly the startup in Indonesia is difficult to get the staff or the employee because uh, especially the Gen Z generations is not really stay long in the one company. Maybe only like 6 months already left, and then 1 years is already left, and then it's always like that right now. In Bali as well, it's like that. And I already survey in several startup because I have several friends who have like startup coffee shop or like this, and then also use AI and always difficult, so like every 6 months or every years looking for the new photographer, new accounting or new marketing or like this, yeah, because the first one because the salary is not too high, and then so we work almost 9 to 5, mostly more than 9 hours a day, so maybe almost like 12 or 15, and it's really complicated, and I confused for this. I don't know what. When my friends ask me about the advice, I really can say like I can't say nothing because I really don't understand because it's really hard and really complicated in uh my area right now. Thank you.
Okay, I see. Bruno, you want to answer before I share my opinion and chance?
That is a really hard question as I am also a Gen Z. Wow. to be honest, if you already see me for here a while, I'm not I'm not only for 6 months. I believe I'm more than 6 months working with Dr. Patrick, working with IEU. And the second thing is I believe that into two things. The first thing is the competitiveness of the persons or even for the companies. So first of all, I'm looking at the Gen Z or looking at the worker side. What is the part that we can see? Okay, this person is fresh grad, and what is the competitive advantage between this person and the second person? Most likely, the people who will not see you so much, maybe who will just take a look for the CV and do a slightly interview, and then they will do a hiring. So that's a process, right? And I will believe that many of CV will be canceled out before the interview. So how we're going to do when we are not being canceled out? At least we can earn the interview. As I believe is in two things. The first thing is not only for the current educations, which means that not only for the S1, not only for the S2, not only for the degree or master, but what else you have done for these certain programs. I don't want to use your cafe for example. I just use AI for examples. If you have watched X, which means from Twitter, Elon Musk already said that they don't hire for degree, they don't hire for experience, they hire for the codings. So I'm not telling you that everyone will be just like Elon Musk, but I would believe that if you have some portfolios, some programs that you are working on, it will be enhanced your chances to at least pass to the interview because people will be interested while you are working like AI tools, while you are working at the AI companies, or you are having a experience with AI. So I'm quite curious about how much you know, how much you can help for the companies. So I believe this kind of question will also help you to answer during the interview. And the second thing is I am also quite happy to hear that in Indonesia a lot of startups already, and then hopefully they are also implementations with AI. But if not, that's your chance, I would say. And for those kind of companies or to hiring people, actually in Hong Kong, actually I would say it's even harder to hiring people in Gen Z, or even we have in other terms. It's not saying that Gen Z is doing well. It's actually conquering the world. It's just changing the entire working experience, changing the entire stuff for the working module. So let's say like we are doing like cafe, and then we need to hire a person in 9 to 5 or 9 to 10 something. Is it possible for us to do in two ways? The first way is it's really necessary for a person who are standing here 9 to 5. That is the first questions that we need to ask while we are startup. And the second thing is how exactly we are going to implement and others items like digital items like AI in order to work this smoothly. Although it's a little bit hard for the cafe or for the offline shop because they tend to quite hard for them to do a no person companies or no person in the store. But we can also consider in two things. The first thing is, can we have a we just cut down the chair or something like this to do like a takeout? Or is it okay for us to do it online, sell it on online? Then we are working with the platform where then working with only the streets. Yeah, that's another concept that we can consider. And then second concept, I believe if they really need to like 9 to 5, because I believe some of the businesses or some of the work, they have to be a 9 to 5 person. So is it also okay for the beneficials to the staff, enough welfare or enough items to let them to grow? Because I believe that for the person in Gen Z, they think differently. They are not working only for money. They are working of other stuff, which means the intentions, which means the motivation is more important. And money is just one part, and it's not internal. It's just external. I would say it's external agreements or external encouragements, and it's not is not only for the Gen Z. It's not enough for Gen Z. I think you can consider like how exactly we are building for Gen Z. I will say a hints for you is community. Yeah, I will try
Okay.
to.
Do we have time to for me to
Yeah,
add a
please,
little bit?
please.
Okay.
Yeah.
So I think I feel compelled to share with Adara because I've been through your age as well. I have that such a kind of worry back in my 20s. But the way I counteract, the way I think for not just for China, right, but for Indonesia, for China used to be the emerging economy. But now Indonesia is the new emerging economy, one of the emerging economy in the world. So you guys had a great advantages to see new kind of business coming in. So the framework that I would advise you to look at your future is like try to become an observer to prepare yourself for the new types of business or the new industry versus just for the industry that you see in some other country, right? Because if you look at what's the new category of business that are coming up in Indonesia, then you prepare yourself, the skill set, the mindset, AI, whatever skill, right? Whatever, you simply prepare for that type of business instead of preparing yourself for one specific company or one boss, right? So if you prepare your skill set for an entirely new industry that you see are coming, right? You see there are more these company coming up in the next few years, and then you prepare for that industry, not for one particular company in that industry. Then you have the confidence to say, hey, I learned AI, I learned this and that, not just for the next 3 years, but for the next 5 years, 10 years, that are going to keep my skill set relevant, right, for the next 10 years. So that's a great question to ask, right? So that's a unique advantage of being, living and working in Indonesia, one of the emerging economy. So that's what I have to say.
Very good. Thank you. Yes. Just how the questions start with being as a, let's say for example for graduate young, right, young graduate, the salary, the treatment is not as good as the experienced staff. I think just want to share with you the world has changed. The world has changed with the AI. So right now in the market is the other way around. So if your graduate is a new graduate and if you know AI, and because AI is able to support you and provide you a lot of knowledge in the industry, and some companies start hiring young people to replace the job opportunity. So I think it's very important that if you are a graduate, then you don't have experience. Yes, I understand. Don't experience, you may not able to get good pay job. But with the AI actually can help you to give you a very interesting knowledge. So the old time is your salary, your qualification plus experience. Now the new time is your qualification plus AI. And with your experience. So you don't have experience, fine, but AI is strong. That's good. And a lot of entrepreneurs, a lot of boss, they don't know AI. And when you do an interview, yes, they may think, okay, you're new, right? How much you know? But when you start working, you demonstrate your knowledge, your capability, and that is a good advantage for the young people now. Okay, so I hope that this is not from me. This is from LinkedIn, the top human resource platform. They say company is hiring young people with good knowledge in AI or good usage of AI. Okay, so don't miss this opportunity, whether it's Indonesia, China, Singapore, everywhere, the same thing, right? Yeah, so learn as much as possible to be smart person. Okay, I think that's very important. So it's why I always say that now it's not about knowledge worker. Everyone got knowledge. It's intelligent worker. Now, how can you be an intelligent worker? You keep learning, using AI technologies, very positive attitude, and hungry to succeed. All these things will be the future talent. Okay, yeah. So all the best.
Okay, thank you.
Okay. Any other question from you?
Patrick, do you live in Singapore?
Yeah, I live in Singapore. Yeah.
Where?
Where?
Yeah, I think like
Yeah.
I was contact Mr. Anugrah because I always go to Singapore's like 3 months or 6 months, and then later about 27 February I will go to Singapore again, and then it's when I show the letter of over for the payment, and then I show the address of your office or the university or the campus.
Yeah. We have office. Yeah. We have office in Suntec. Yeah. Suntec City. Yeah.
Yeah, in yeah this. Oh yeah, I know that place.